Hi, Assalamualaikum. My name is Abida Anissa binti Azmi, and I'm from HM252A2, Part 2, and my ID number is 2025226144. Good day to our respected lecturer and fellow classmates. Today we are proud to present to you our analysis of the financial accounting and reporting practices of IKN Maju Enterprise. First, let us begin with the background of the business. IKN Maju Enterprise is a local small-scale business specializing in traditional seafood preservation, specifically dried fish, that was established 32 years ago, back in 1994, by a young woman named Ms. Noraini binti Amir Ajil. This business operates as a sole proprietorship business, which means it is completely owned and managed by one person. Inspired by her father and siblings, who were traditional fishermen, Mrs. Noraini took a step on starting a business selling dried seafood. IKN Maju Enterprise focused solely on one specialized product line, which is traditional dried fish, ikan kering. Their main varieties is ikan kering gelama, ikan kering duri, and ikan asam. In terms of core business activities, IKN Maju Enterprise follows a 7-step operational process to ensure its quality and freshness of the traditional dried fish products. The cycle begins with purchasing fresh fish stocks from local suppliers, which are then stored in coolers to preserve their freshness. Next, the fish undergo primary processing, which is scaling, cutting, and salting. This is followed by a thorough washing stage before the fish is subjected to sun drying for 2 days. Once perfectly dried, they proceed to packaging and finally ready for distribution to retail stores across Sabak Bernam Selangor. The call to increase business sales and customer satisfaction is a broad business-to-business distribution network. The business supplies bulk products directly to 50 local grocery stores on a strict bi-weekly delivery schedule to ensure maximum freshness. The products are supplied by the shop size and customer demands. For larger markets, they will supply for 200 to 300 packets monthly, while for smaller markets, they will supply for 50 packets only. Moving on to its business characteristics. Let us look at the general characteristics of the business. First, we have business registration. In terms of legal structure, as I mentioned before, the business operates as a sole proprietorship business, which means it is entirely owned by a single individual and officially registered with Companies Commission of Malaysia, SSM, Suruhanjaya Syarikat Malaysia, under Business Registration Act 1957. Second, we have owner's capital contribution. Financially, the business kicked off with a personal initial capital contribution of 600 Malaysian ringgit introduced by the owner herself. Third, in terms of ownership, the business is owned completely by a single individual and it is registered under the owner's own name, which is Mrs. Noraini. Fourth, regarding management and control, the business is managed and controlled by the owner themselves. In the case of IKN Maju Enterprise, the owner has the absolute decision-making power over all daily operations. There is no need to consult board members, which allows the business to adapt quickly. However, this also means the entire operational burden and managerial responsibility rests solely on the owner's shoulder. For loans and financial assistance, the owner did not rely on the traditional commercial bank loans. Instead, IKN Maju Enterprise secured a one-off grant of 10,000 Malaysian ringgit from Farmers and Fishermen Sungai Besar Association, as she is one of the active members in that association. Next, regarding on the profits or loss, since there are no shareholders or partners in the business, so all the processed food revenue and profits belong entirely to the owner herself. Conversely, any financial losses incurred must be borne solely by the owner as well. Finally, let us look at books and accounts. Legally, there is no legal obligation for sole proprietorship to keep formal books or file annual accounts with the Companies Commissions of Malaysia. And that concludes our presentation for the introduction to the business and its characteristics. Now, we'll move to the classification of the business items by my other members.
Assalamualaikum, I'm Shazana Nadra from HM252A2 Part 2. My student ID 2025432524. Today I will present the classification of business item for IKN Maju Enterprise. In accounting, business items are classified into 5 categories, which are asset, liabilities, capital, revenue, and expenses. This classification helps business manage their financial record properly. First, let us look at the asset of IKN Maju Enterprise. Assets are items owned by the business that help in daily operations and generate income. The assets of this business include vehicles, fish cutting tools, 2 large ice boxes, 2 fish drying racks, 1 freezer, weighing scale, and cutting table. These assets are important because they support the fish processing and selling activities of the business. Next is liabilities. Liabilities refers to debts and financial obligation owed by the business. For IKN Maju Enterprise, the owner mentioned that she does not like borrowing money. Most of the business capital comes from her own fund. However, she did receive government assistance of 10,000 as a fisherman. The assistance was used to purchase 2 drying racks and 1 freezer. This means the business has very low liabilities because there are no major loans or debts involved. The third classification is capital. Capitals refer to the owner's investment in the business. In this case, most of the capital used in IKN Maju Enterprise comes from the owner's personal savings and own money. This shows that the business is mainly self-funded. Next one is revenue. Revenue is the income earned from selling product to customers. For IKN Maju Enterprise, the business sells dried fish. Based on the information collected, 10 kg of raw fish costs 20 ringgit. After processing, it produced 12.5 kilograms of dried fish. The 2.5 kg of dried fish can be sold for 62 ringgit 50 cents. On a monthly basis, about 250 kilograms of raw fish are processed. This produces 62.5 kilograms of dried fish. The estimated monthly sales revenue is 1,562.50 cents. The product is supplied to both mini markets and village shops. Mini market can sell between 200 and 300 packets per month, while village shop sells around 50 packets per month. Lastly, we have expenses. Expenses are the costs incurred in running the business. For IKN Maju Enterprise, the expenses include raw fish purchases, 250 kg per month, costing 500, operating such as packaging, transportation, utilities, and other processing expenses amounting to about 25 ringgit for every 10 kg batch of fish. For every batch, revenue from dried fish sale is 62.50 cents. Total costs are 25 ringgit. Therefore, the estimated profit per batch is 37 ringgit 50 cents. These expenses are necessary to process and market the dried fish product. In conclusion, IKN Maju Enterprise owns several assets used in fish processing, has very liability because it operates mainly with own capital, earn revenue from dried fish shells, and incur expenses for raw materials and operation. Proper classification of these business items helps the owner monitor financial performance and make better business decisions. That's all from me. Thank you. Now I will pass it to the next presenter.
Assalamualaikum. So this part is gonna be the recording process of a business. So basically in this part we're gonna talk about how the business owner recording their own business, their transaction, their loan or something like their payment, their process of buying things from the first one until the end of the process in the business. So basically in recording process there are source of document which is business owner collect all the payment things, all the supply, the buy of raw materials and something else. And then there are journals, there are ledgers, and there are what we call trial balance to see if there is any mistake in their accounting. So let's go. Okay, so basically there are two types of recording process. The first one is we use a physical, which is a book, and the second one is using software. When you're using book, there are some benefits of this both. If you're using book, it's physical that only owner can use by themselves, and then it's safe from virus and hack, and then it's a lot cheaper because you use book. If you use software, of course there is more storage for use. It is more eco-friendly. You doesn't use any tree that been cut, and then it is searchability. It's easy to search the item that you want to find. It is what we call it, adaptability, and this is the flaws for a book, because if you use a book, you cannot use many storage. You need to buy more books. You need to cut more trees, and then if you use the software, you need an update, so it's a lot pricey. You need to pay the service that you use for every month or year according to the pack that is being provided from the companies. Okay, so how would she record all her recording business? First of all, there are supplier, and then there are distribution, and then there are packaging part, and then there are other things that she record in her business. She keep all the invoice and all the receipt for her, for a guide for her to record in her business, in her book of business. And then in the she buy something from supplier like a fish, and then she buy other things like salt, knife, and then plastic for packaging part, and then for the distribution she record all her things that she buy when she deliver the product, like oil price for car, and then a food that she might be used when she go distribute the item. And then she take two things, like she have the invoice and the receipt. She keep it for record in her book, and then she doesn't take any what we call it, any financial statement. She knows that there is many benefit for financial statement, but she doesn't want to take that liability. She knows that she could take many loan and grow her business, but she doesn't want, because she afraid that she might make a mistake, and she could go to jail because of it. And then what we call that, recording time. She record 1 to 2 times per month, because she does a distribution 1 or 2 times per month. That's all from me for the recording process of the business. And let me pass to my friend Hanif for him to explain his part. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Hanif bin Jabir Aziz, and I want to share about the strength and weakness recording process at IKM Maju Enterprise that I already searched. First of all, company internet strength and weakness are factors that you may manage and effect in business. So let's move to the next point, which is strength. Firstly, audit flow clarity, because a manual system provide a very clear physical paper trail, making it easier to review than using software. Secondly, is easy to access, because manually can be reviewed and giving operator complete freedom without having a to go through a complicated software learning process. Thirdly, is a low recording cost, because the owner only needs a ledger, calculator, and pen compared to using software. Because if owner needs to hire accountant, he need to labor more costs. lastly is the less risk of technical problem because manual systems are free from cyber threats and computer damage and virus that can be result in data loss. Besides strengths, there are also weaknesses. So here my points. First of all, hard to understand and challenging to make rapid decision because manually store data make it hard for owner to understand the full picture of their finance, whether they are profitable or not. Secondly, it take a long time because manual process require a lot of energy and time because each piece of information needs to be physically copy repeatedly. Thirdly, a risk of human error because the probability of error occurring is a very high. A very stage of the accounting cycle, such as miscalculation and record hanging. Lastly, is a limited data record because the paper documents are easily damaged by things in the environment, such as natural disaster and loss. This may affect the recording process for the future. In my conclusion is, as we know, asset, revenue, liability, and expense and also equity is very important in managed business effectively. We can understand how proper financial recording help business maintain organized finance information. That's all from me. Thank you.